Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and the YouTube video is coming after a while, probably after Eid, that I'm putting up a video on YouTube. So hopefully, inshallah, from here on onwards, things will be more streamlined, and I'll be more online and probably talking about stocks, and you'll get more videos in here. So I apologize for all the delays that has happened over the last 2 3 months. You would understand that there were issues, health issues in the family and with me, etc. But things are streamlining, so hopefully you'll get at least 3 to 4 videos a week. So I cannot promise that I'll be here online every day. Live sessions may not happen, so that's another thing altogether. So I might not be able to do that, but I'll definitely discuss about markets, stocks, as well as I'll discuss about you can say indices in detail. So today's video is slightly different. I'm going to talk about indices, which I normally do not talk about because the markets have gone up sharply over the last 2 3 months. And to tell you frankly, it has been a one-way rally that we have seen. We'll discuss about where the market is at the moment and how it is, looking. How is it looking over for the next 6 months, as to how the small cap index is looking, small cap or the Nifty 500 index is looking, and how is the Nifty looking altogether, as to where this could head. Because if there is a correction in the annual, then we need to be very careful about what we get into currently if we are changing positions as a trader. As an investor, if you have bought at in 2022 into you can say into stocks or companies which are more aligned with the economy, then you would have made a decent amount of money. Which other sectors could perform? So we'll discuss everything about that. So let's get started. And so let me reduce my video and take you to the you can say screener website. Before that, I'll have the disclaimer at place as well. So let me do that. So my video gets reduced here, and let me take you to the disclaimer first, because that is extremely important with the environment we are in. So I'm not a member of the NSC and BSC, and whatever I discuss here is purely for educational purposes. This is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Whatever discussions I have here is purely for educational purposes. There's no intention of luring anyone into buying into anything, be it Nifty, Bank Nifty, or any stock. And whatever decisions with respect to financials you take, kindly do discuss your financial advisor. Any investment into the markets or any investment into any asset class is subject to market risk. Kindly take that on note. So now let me take you to the money control website. So there I have lined up three indices here, which are the Nifty, the Nifty 500, and the BSC small cap, and we'll discuss about all these three. I know currently the market is in progress, and Nifty is consolidating. So I've just refreshed this. Before I talk about this, here's a small request that kindly do support me on Patreon, and to get better, you can say more content and discussions on markets and indices, etc., and economy. You can definitely subscribe to the Patreon network. It will help me grow a channel. It will help you also ask me questions and ask me queries there with respect to the economy and the holistic marketplace altogether. So you can support me there also. There's a 1 year membership with a 20% discount out there, so you can go ahead and have a look at that as well. The link will be in the description, along with other, you can say, email IDs, etc. You can be a member on WhatsApp as well as on YouTube also, if you click on the join button. Those who are members on YouTube, you'll get updates today on a lot of things. So kindly do check that out by evening. All right, so let's just discuss about the markets for a bit. So this is the Nifty, and we are at 19,500, 560. The high was around 19,612 that was made today. And the market is going all guns blazing. If you look at this chart, and this is actually a chart that dates back to 2022, so it is a 1 year chart that we are looking at, and we have seen dips and moves upwards. And if you see here, around November of 2022 we made this high of 18,800 odd, 800 and a change, and now we have taken that out. And once we have taken that out, we are just going into blue sky territory. If you look at the RSI, it looking slightly stretched, so there could be a situation where the market may consolidate for at least you can say uh, uh, probably a week, 10 days and all, and then the move will begin again. So what I'm expecting is consolidation in the market at the moment. But what is interesting in here is, if you look at uh, from a perspective of the last 5 years, if I take out the 5 year chart, then you'll have a better understanding. So what has happened is that the market went to 18,500, 600 around here, 18,500 around here, when the market made a top in January 22 or around October of 21, when we were everybody was buying stocks like IRCTC, Polyplex, this, that, and whatnot between these periods. I mean, the market made a top of around 18,500, 600, around those levels. I don't know the exact levels, but it was around 18,500, 600. So from October 21 till July, or let's say, let's go back further, and let's go to say July of you can say 21 or so. We have been in a situation where the market has not done a lot. So from October 21, in October 21 we made a high of 18,500, 600, and from there on in we are at 19,500, 600. So 1,000 point move over the last, you can say, let's say if this is July, so I say over the last 2 years or so is not that big. So if I take, so for example, let's understand why I'm saying this. So let's understand how the earnings were in FY21 and how are the earnings projected to be in FY24, and then you'll have an understanding. So or say FY22, because we are talking of 21 October, the top being made around here, which was October 21. So in FY22, let's go back 2 years, because FY24 we believe the earnings should be at least 950 rupees. FY23 the earnings were 850 rupees. This is for the Nifty stocks. And FY22 the earnings were around 740 rupees. So around 740 rupees, the in FY22, that was the expectation. The markets were at 18,600, and if I take that on, we are looking at 25 times earnings. The market was trading at 25 times earnings, and that's where they topped out. Now, just to give you a perspective, in 2008, when the market made a top, so let's go to a maximum chart of Nifty. When the market made a top around here, which was around December, January 2008, it was around 6,300 or something. That was where the market made a top, and there was a sudden fall. The markets were trading at a valuation, and even if you look at an RSI was close to 82, and today the RSI is around 68. So you'll understand that it's not overly stretched. So at around 6257, this was the high, 6,257 was the high then in 2008. The market was trading at 28 times. So if I take that on note, the market was trading at 28.1 times, which was the market's EPS was 220, 223 rupees. So if I say, so let's take two, three, you can say measures here. 223 was the earning were the earning for the Nifty in 2008. In 2023, the 2024, the earnings expected to be is 950 rupees at least. This is bare minimum I'm talking about. So the earnings have expanded 4.3 times over this period of 15 years. The market gone up 4.3 times, so from 6,000 to 50. Even if I take 6,000 as the level and I say 4.3 times, we come out at 25,800. So I'm not saying that this is so simple that okay, we'll trade at 28 times and we'll go to 25,800. So if we don't take this is the highest level of, you can say, euphoria that the market could go to. Now let's come back. I don't see the market trading at 28 times. Now let's see if from 950 rupees, what is the market trading at right now? At 19,950, if the market goes closer to 20,000, we'll be trading at 21 times earnings. So that is why, in my opinion, at 21 times earnings, this is not overly stretched. I'll talk about corrections, etc. in a bit, but the market is not very stretched at the moment. Around 19,600 on 950 rupees of earnings, we are trading at 20 and a half times FY24 earnings. Now, another thing you need to take into consideration is that we are in July. 3 months down the line, say in October, or let's say 4 months down the line in mid November, we'll have at least 6 months, 2 quarters of earnings of Nifty come in. So people would have projected by then, by November, as to how FY24 earnings would be, and people will talk about FY25. That's one thing. So a lot of people are often are making an understanding that 950 will be FY24. In FY25, if we say even a 12% growth on this, then we are looking at 950 plus 115, that's 1065, and they are basing their judgment on the fact that the government would come back into power, and the growth will continue. Let's just take the pessimistic view, for instance, that there is some coalition that comes in, or the government has a weaker majority, etc., and there is no further push to the economy at the level that it has been for the last 2 3 years, which the government has done phenomenally well with. If that happens, then how are the market going to project that? Of course, the markets are going to correct. Now, how much would the correction be? So to understand all this, we need to understand that where could be the top. So in my opinion, 21 times 950 rupees, that's around 20,000. We could form a short term top in the market. That, so I am not saying that whatever I say here would stand true, but this is how I analyze the market based on earnings. So I understand that 950 rupees is probably a given for FY24. Based on that, if you stretch this market further, the way the rally is taking place, another 500 points on the Nifty is very much possible. Again, 19,950, 20,000 being that round figure mark. If you remember in 2015, we had a situation, a similar situation, where the earnings were expanding, but we ended up making a top around 8,000, somewhere around say 9,800, or something like that. This was around, you can say, December of 2015. We made a top. So this was around here that we ended up making a top. Let me just get you there, and then we had a fall. So let's just refresh this chart, and then I'll let you know. So basically what happened was, if I take out a maximum chart out here, then you'll find out that in from April 2014, when this government was about to come in, till here, this was a huge rally in place. And around December, when the election results of Delhi came in, this was around here. So December 15. So this 1 year went by very well, and around, you can say, 15 December, let me take you there. So this is October. Around here the fall began, and the fall began big time. and this was a massive fall in the market, and eventually the market went to 6600, 6800 or so, from around 8900 when the top was made around those 2015 December time. So in 2 3 months we fell something like 20%. China was a factor there as well. Even at that point of time, because FY16 earnings were priced in, we were trading at 24 25 times earnings. So I don't see the market trade at 24 25 times earnings. That's the point I want to make here. So at the moment, I believe that 19,950 for a short term period could be the top. How much would be the correction? I think the correction would be somewhere in the region of 3 to 4%. So let's say 3.5%, we have a fall, so 700 points. So from 19,900, we could see a levels of 19,200, and then the rally will begin again. So I don't see this rally culminating very soon. And so, what is my eventual target for this market this year? I feel that going forward, we could be headed towards, based on 952 rupees earnings, somewhere in the region of 22 and a half to 23 times. Let's say the lower end of it, 22 and a half times earnings, 21,400 is the minimum level I see this year to come in, and probably this will be around Diwali or so, when the elections would kick in November December, and then the correction may take place. So this could be in the region of 21,000 to 22,000 is where uh you can say a medium term top, a top for the next 5 6 months could be made, and from there we could see a decent 7 to 8% correction. So we could see from 22,000 we may go down by around 1600 points, 1700 points. So somewhere in the region of, you can say, 20,000 will come back to. So these are huge numbers, I understand that, but I have a feeling that from those 21,500 levels, we could see a definite 8% kind of a fall coming in, which is around 17 1800, and that will be another buying opportunity around 19,000 19,200. So first correction that could be closer to 19,000 from the next 3 400 point rally, that could be in August, and the second correction could be in late December or January, somewhere around will be the correction that would come to a culmination and we'll see a rally. These are only projections, again the disclaimers do apply, but the market is headed much more up rather than down because of the earning expansion that we are seeing in many mid and small cap companies, in many nifty companies as well. The whole economy is now coming out of the realms of the pandemic. In 2022 we saw a recovery, but the market did not, you can say, price that in fact till 22 March, if you see here, if I take out the 1 year chart, we have seen that from around say November of 22, the market fell sharply and has fallen a lot, and the mid caps did not do anything even in this period between, you can say, October 22 till here, October, November, and all that. So, in this period from July to November, when the markets did extremely well, mid and small cap did not do that well. In fact, mid and small cap has come back from March, and that's where I am headed now. So, when this fall happened from around 18,800, 850 all the way to 16,700, that is where I suppose the bottom was formed, and from here on in we could see a massive rally in the market, and that is exactly what is happening at the moment. And we are, well, we are away from the, we are 60 70% there to the top, but over the next 20 30% on the Nifty, a lot of money will be made in Nifty 500 and BSC small cap, and that's what we'll discuss now. So let's come to BSC small cap index. So currently it is around 34,000, 33,900 and a bit up. If I refresh that, so we are at 34,000 actually at the moment. So why is this happening? this is happening because over the last 2 years, there are companies in the small cap indices that have produced very good results, strong results, but the valuations became cheaper and the stocks did not move. So now everything is catching up, and this is exactly what happens time and again. We have seen that happen in 2005 to 2008. We have seen that happen in 2015 to 18, 15, 16, 17. We have seen that happen uh, after the pandemic from 2020 March, April till around 21 October. And we are seeing this again. Now, how far can this go? So, I've made some calculations again on the small cap. First of all, look at this bazooka, the way the market has shot up over the last, you can say, 1 year or so. So it went to 26,000 in March. I mean, March of this year was really a catastrophic month, February, March of this year, because the market started falling from December onwards. The mid and small cap, if you remember, Zomato at that point of time was trading at 70, 75 rupees and then fell to 47. And there were other new age stocks and other stocks that fell sharply. So this was the fall from December till March in 3 months, from around say 31,000, around 31,000, we went to 26,000. So there was a good 15-18% index decline. From there on in, we are up from around 26,000 to 34,000. So let's see how much are we up. So 34,000 upon 26,000, we are up by around 30%. So the index is up 30%. After falling 15%, the index is up 30%, which is like, wow, that is just amazing. And how far can we go? That is exactly what we keep discussing. But what we forget is the way the capitulation took place earlier also. So if I go back and take a 5 year chart of the small cap index, we see a lot of resistance around here, 31,000, 31,200 or something. This was the high in Jan of 22, when a lot of your chemical stocks which have not moved up, a lot of your metal stocks, a lot of your IT stocks made their top. Mid cap, I'm talking about mid cap, small cap, 31,100, 200. So this was Jan 22. If I go back further, in October, we made a top around 30,000, 30,200, 30,300. So if I say that over the last, from October, let's say till today, we are in July, over the last 2 years, the markets have not gone that much up. So let's say July of 2021, 27,000 was the high here, around 27,000, and we are at 34,000. So over the last 2 years, we have moved up by around 7,000 points on the small cap. And remember, I'm not taking the top of 21. I'm taking mid tier top of 2021 of the BSC small cap. That's around 27,000. So from 27,000, we are up by 7,000 points, around 25%. So the rally over the last 2 years have been 26%, which gives me a CAGR of 12%. 12% annually we have gone up, 12, 12 and a half or something like that, around 12% over the last 2 years on the small cap index, which is extremely uh, benign results compared to the kind of results small cap indices do give. And if I expand this even further to 2018 and all those highs that we were making, and I think it was around let me see. So this was around 2018. This was around 2018. This was December of 2017. So December of 2017, we made a high at around 19,500 or so, and we are at 34,000. So if I take from 34,000 to 19,500, again the move has been of around 75%. 75% over the last you can say December 17. So this has been 5.5 years. Yes, around 5.5 years, the market is up somewhere around 75%, which means which gives you an idea that it is around up around 13% CAGR. So it's not the phenomena of the last 2 years that we are up 12.5% CAGR. Over the last 5.5 years, nearly 6 years, we are doing 12%, 12 to 13% CAGR on the BSC small cap. Now, this is where the anomaly, right? You can say lies. Markets do not give you straightforward returns. We all know that. So somewhere there's a bulk of return that come in for 1 or 2 years, and then for 3 years nothing happens. I think next 6 to 8 months could be big for the small and mid cap indices. We will see corrections. I'll talk about correction, but the move could be huge in some of the stocks which will come out with strong earnings. We'll talk about the sectors to invest into, but at the moment I feel that the CAGR of 12-13% could be much bigger. Now how big this can go is somewhat like this. So let me take out a 5 year chart again. So once we saw, you can say, so if I take out the maximum chart here, once we saw the market take out this level, this was the 2007 level of around 12,000, 13,000 on the BSC small cap. Uh, and then we saw this. So once this level of 13,000, 13,500 was taken out, we made a high in 2018 of somewhere around 19,500. So we had a 6,000 point rally at that point of time on a base of 13,500, a 45% move there itself. Once these levels were taken out, and this was on from a period of 2008 to 2018, and then a top was made, and then we shot up even further. Now if we calculate this high, that is around 19,500 or so, let's say 19,500, then we dipped in the pandemic and we made a high of 31,000 over this period. This was a period, again a period which was around say 4 years. In 4 years from those highs, I'm just taking highs and not taking any other levels, from high to high, from high of December 2017 till you can say high of December 21. In 4 years period, we moved from 19,500 to 31,500. This was a move that was around not not 44% but 61%. So if I say a 60% move is about to come in after breaking this high of around, and I'm not saying very huge numbers, but after breaking this high of 19,400, 500, then the move could be very big. So we have to, what we have to analyze is, this is the top, if you see here, which was around 13,500. The next top was made around 19,500. The other top was made around here, which was around 31,500. I've shown that to you. So in the last 1 year, the high that we saw was in January, and this was around say 31,000, 31,500. If I say a 60% move is coming from 31,000 levels, then we are looking at these levels, which I have talked about earlier as well, but 49,000 to 50,000 on the small cap index in this run could be possible. I'm not saying that this is just going there. Another 15,000 points is coming up over the next 2 months or something like that. And let's talk about correction, because everybody will be top of my head that you're only talking about one way. What I believe is that we will correct around 10% from here. So I think from 34,000 we could go to 31,000 levels. Also, there could be a decent 3,000 point correction, 2 to 3,000 point correction that could come in over the next 2-3 months. So there could be a chance that we could be down 6-7% on the index. This is perfectly all right, because this is in line with the Nifty correction. In Nifty, I am seeing a 3 to 4% correction. From 20,000 we could go to 19,200. In the BSC small cap, we could go all the way to 32,000, which is a good 2,000 point correction on 34,000, which is around 5-6%. and then the move will begin, and this could take us to say 38 40,000, then a correction, and eventually the top could be around 48 49,000. So if you have the gumption, you can probably get into some of the stocks. So rather than talking about Nifty 500, let's talk about some of the stocks that I believe are going to do well. So we'll discuss about that. So let me just bring myself to the forefront, and we'll discuss about the, you can say, these you can say companies. So let me do that first. So let's transform and fit to screen. All right, so now let's discuss about which are the, you can say, sectors to invest into. I'm not going to talk about specific stocks, but sectors. I think IT is coming back after a huge, you can say, downturn. I believe IT, mid cap IT could do well. Some of the stocks, and these are not recommendation, could be LTI, Mindtree. You have Birlasoft, which is doing well on corrections, can be looked at. Scient look good. Nuclear Software look good, and so there are other companies that one can definitely look at. So IT, I think, could be the forefront or the runner in here. I think the all your railway stocks, all your Musgao Donk of the world and everything, after a correction for 1 or 2 months, will start performing again. And you need to look at new age stocks. The way Zomato is performing, and a disclaimer, I have the stock in my portfolio. The way other new age stocks are performing, I think it's about time that those should be looked at seriously from a 6 to 8 months perspective. So all these levels I'm talking about could be before elections, and then a correction could take place, or around the election time. So 49,000 on the BSC small cap, 21,000, 21,500 on the Nifty, etc., could take place over the next 6 8 9 months, 7 to 9 months or so, with corrections in mind, because I don't see an earning contraction coming in, at least for the next 1 year, for the next 2 years. And that's why the market is going up so much, because market projects 1 year forward. So over the next 2 years, if there is no problem with the earnings, etc., with the market, then the market will continue to perform. So probably look at IT, look at new age, look at infrastructure companies on corrections, infrastructure real estate companies on correction. These three sectors, in my opinion, are going to do well. I don't think, although consumers will do well, and especially, you can say, MNC consumer companies, but I don't think the great outperformance will be there. I believe the major outperformance will be into companies which are into these domains like IT, infrastructure, capital goods, you have railways, etc., as well as new age. I think new age stocks are making a long term bottom, and could go up big time over the next 2 years or so, 1 or 2 years. I think new age stocks could be looked at differently, because the markets may start dipping and they might still perform over that period. Pharma is a space where I'll stay away even now, because of the US FDA thing, that they have become very active. There could be select pharma stocks that will continue to perform, but this is a very big reason to just stay away, because any day anything could happen, and those stocks could fall 10 15% etc. And I believe that most of your economy related stocks are overhyped at the moment, stretched. So you need to be careful there as well. So wait for corrections to buy into all these infrastructure companies, etc. Real estate is something that is now coming up, so mid cap real estate could be looked at as well. So this was the video on the market. I hope you like it. Kindly do like, subscribe to my channel, and also support me on Patreon. We'll come up with definitely different kind of videos from here on in, on stocks, on markets, as well as on. I'm also this time around, hopefully for sure, I'm going to begin uh, with sessions on markets, and how to, you can say, trade into the market, invest into the market. This is going to be a 10 to 15 session, around 10 to 15 videos that would be there which would talk about these kind of even more. I think 20 to 30 videos that will be there starting from this week. Hopefully, this weekend, I'm going to begin with that, talking about my experience in the market over the last 11, 12 years and how you can become better with respect to having a better psychology towards trading into the market. All right. Thank you. Thanks a lot.